The ATX DAO Podcast is brought to you by our friends at Tequila 512. Looking for a way to decentralize your happy hour? They got you covered. Welcome to the ATX DAO Podcast, the hub for exploring the forefront of blockchain technology in Austin's Web3 community. We connect you with innovators within ATX DAO and beyond as we venture into the world of decentralized technology. So crack open a beer and join us for a front row seat to learn about the innovations and trends shaping our digital future. This is the ATX DAO Podcast. Welcome to the ATX DAO Podcast. We are excited to welcome our guest for today, Rob Hamilton. Rob, welcome to the show, man. Glad to have you.
Thanks for having me.
Yeah, cracking a beer. So we have the rare pleasure of having an in-person interview today. So welcome to Austin. Glad to have you here in Austin. You're here for the Bitcoin Plus conference, I think.
Yeah, exactly. Yeah, I met Ash at OpNext a couple weeks ago, and it was a perfect opportunity to come on and see you guys in person because I knew I was going to be down here in Austin.
Heck yeah.
Yeah, it was a really great conference, and it was really surprising, right? Like, kind of, we were just talking about this earlier, right? You're in town for Bitcoin Plus, right? Yeah. And like, it was really interesting because like you have accessibility. You were just mentioning that over here, you can talk to devs just like freely, openly. And it was one of those cool things for me where it was like, I was meeting all these people from the Bitcoin side and I was like, whoa, this is crazy. All these people you just see handles for, they're all here just walking about.
Yeah, no, it's really accessible in that sense where Bitcoin as a development community is pretty small. So if you've been around for a year or two and you're talking to people, you're immediately connected to people and you're one hop away from everyone else, right? So it's a good tight-knit crew of people who are either working on the protocol side, working on companies, applications, whatever you have it. Usually if you're building something interesting, domain knowledge in Bitcoin is kind of compartmentalized where if you have a niche question, you want to reach out to these people and they love talking about what they're specialized in, right? So there's a really great just knowledge exchange that's always happening.
Yeah, awesome. It was funny. We were mentioning that in like, I think the DAO update or something like that, where I was just like, yeah, the amount of neural arbitrage that I captured on, it was fucking insane.
Yeah.
Like just talking to everyone there and meeting everyone and just like seeing all the stuff that's getting built on that side, right? And
yeah.
just like, wow.
In the nature of the Bitcoin protocol too, like for like an arbitrage standpoint, everyone's usually pretty open about like, this is what I'm working on. This is how it all works. And up until recently, maybe like past year or two, no one ever cared. Yeah. And now people are moving over to Bitcoin and building stuff now. So that stuff, it's a lot less siloed. Like this is my alpha to not share with someone else because I'm doing something. Like it's very open for people to be going off and doing stuff.
Yeah, it's like really a blue ocean, right?
Yeah.
It's like you need more people doing stuff. And then that way you're just going to, and I also believe just like in startup wise, like iron sharpens iron, right? So like really you need more people. You need to have someone that's like breathing down your neck so that you also wake up and then you're like, hey, I remember there was this other person working on this. I need to also get better and work at things as well.
Yeah, that's when we started our company back in 2022. So I'm working on co-founder and CEO of AnchorWatch. We are offering insured Bitcoin custody. Think deep cold storage today with we are Lloyd's of London coverholders. So we are direct agents of Lloyd's of London when it comes to the underwriting, the distribution, the execution of the policy. You get a policy. We can insure up to $100 million per customer. And that's a Lloyd's of London insurance policy, right? And I only tee up that context to say that like when I first started working on this custody solution and like the wrapper of the insurance, I had people approach me like, hey, I tried doing this 5 years ago. Like, let me help you like understand like what the problem points I hit. And from an iron sharpens iron standpoint, I'm a very firm believer in this, that the nature of early stage companies is you're 99 times out of 100, you're dying because of poor execution, not because of competition, right? Like it is such an underdeveloped space. This is not hyper competitive in the sense that this has been around for 10, 20 years and there's a bunch of massive legacy incumbents. It's very ripe for disruption and moving fast, and teams that execute better are the ones that are going to win. And it's not going to be because, oh, I have this secret sauce off on the side that no one else knows about, because the moment any of that starts to appear anywhere, it'll be quickly arbitraged away.
That's very true. Alpha usually finds its way out in the markets pretty quickly. You just have to be able to spot it and basically just execute.
Exactly. 1,000%.
Yeah. But that's perfect. I mean, jumping right into AnchorWatch and your story, Luke.
Definitely want to hear more about AnchorWatch. So tell me, let's talk about kind of the problem that it solves, right?
Sure.
So we start there and then we'll go to a little more detail.
Yeah. So this is on the long horizon of Bitcoin. Bitcoin as a digital bearer asset has strengths and weaknesses when you compare it to traditional assets, right? If you're insuring a house, or maybe most similar I'd put it to is like fine art. That's actually in the insurance market, the bucket of risk we get put into called specie. So think rare art, collectibles, cigar, wine collections, people who insure that kind of stuff. Bitcoin is the closest to that. Now, it's better in many ways because Bitcoin as programmable money, you can do things like a multi-sig, right? We use time locks and we use more advanced Bitcoin native smart contracts, but the base premise though is that the idea that you also make multiple backups of your keys, right? Like you don't have to worry about one physical spot where all of the risk sits. Now, the Bitcoin as just culturally has always evolved from this premise. It's self-insuring. I'm holding my keys. It's my own risk. If I screw up, I bear the risk, right?
Yep.
And that's where you get things like seed phrases, metal backups, multi-sig. All of these things kind of came out of the sense of there is no risk market where I have to be fully sovereign and responsible. Now, when you get to like the actual scaled adoption of this, many people leave it at Coinbase or they leave it on some other exchange. Structurally, most of those entities are either uninsured or they are partial insurance. So Coinbase has $400 billion of customers' assets that they manage. They have a $300 million policy, right? So you start really immediately off, like there's an offside in like the asymmetry. So all the ETFs don't have any incremental insurance. You have this kind of dynamic where a bunch of people may be using Coinbase as a custodian, but there isn't incremental insurance coverage. So it's like if you had 100 homes and you had one insurance policy, right? There is an asymmetry in the amount of insured risk versus the amount of outstanding risk. And that was kind of the core premise we wanted to change, where people charge for custody at massive scale. Maybe you can get under 10 basis points, but for most people, they're somewhere between 15 and 40 basis points, somewhere in that universe. And they're not getting commensurate insurance coverage for that. So the ultimate vision is around kind of transforming custody fees and making those insurance premiums, because that's a better risk-aligned proposition if you're going to pay someone to hold your assets for you, right? Where otherwise it's heads I win, tails you lose as the custody provider, where I collect fees. Oops, something went wrong. Yeah, you're not insured. Sorry. And there's a lot of like, if you're a very large holder, you get preferred liquidity treatment in the event something does go wrong.
Yeah.
Right. So you think, oh, I see this checkbox, $300 million policy. You don't realize that like that may be mostly spoken. Like you don't understand those. And as a average person walking in the door, you're not going to get the level of access to like understand where you sit in the liquidity stack in the event something goes wrong. So all of this to say, I just view insurance as kind of this foundational financial market that exists in sophisticated assets already. And it was, I would say, not being touched at all in any reasonable sense when it came to Bitcoin. And so that's kind of like the big tackle problem. And so we built our own custody stack that leverages Bitcoin native smart contracts. We worked on the Lloyd's of London relationship for like 18 months. So we launched in 2022. We actually went live in market in January of this year. So that's kind of like a very compressed thing. We can take that wherever you guys want and round the conversation. But that was the ultimate thing, is like offering better fiduciary and just kind of like consumer protection for people who don't want to have to manage all this stuff and bear all the risk themselves, giving them a better option.
Yeah, no, that makes a ton of sense. And so in terms of kind of who your customers are, so obviously it's probably a range, right? You probably have folks at the high scale, or someone like me or Ash might want to have y'all take care of.
Yeah, so we can serve. We're the only provider for retail anywhere, but we also can go up to $100 million per customer. Our minimum policy size is $250,000. It's just because amounts smaller than that, the overhead doesn't quite justify, the operational cost to execute that.
Of course.
And so most of our initial onboarding was retail, just because they move fast. If someone has $5 million of Bitcoin, they can quickly just make that self-execution. Whereas if they're part of a corporate structure, there may be extra steps. Getting a lot of people with commercial entities that are self-directed IRAs, right? You have people that maybe we now have customers who have a loan. They were able to find private capital to get a loan. The capital provider said, "This is great. I want it insured. I give you like a bank may give a mortgage for a house." They don't do that unless the home is insured, right? So they review it from the same premise of, okay, well, the asset itself should be insured in the event something goes wrong. Outside of like a liquidation event where they would be able to claim back the capital, you want to be able to step in and know that like that risk is off the table. And that actually makes capital costs cheaper because it's one less thing that needs to be priced into the risk of the interest rate for the loan, right? So it's been fun having now launched and kind of continually building the plane while it's in the sky, working on existing customer features, optimizing for new product requests, and kind of like juggling all these different things. It's been exciting, So on that side, looking on rolling out other products, being able to offer to more people, making it easier for larger institutions to be able to work with us. Like those are all just kind of different pieces we're sequencing out now.
Yeah, I mean, like, it's really funny also to hear this. Like, firstly, congratulations
Thanks.
on the launch. I know it's not easy, right? Like, getting
No.
something out is not fucking easy.
No,
I'm
It's a
sure
lot of
that we
work.
could spend the next few hours just like really just talking about just those struggles, right? 'Cause
Sure.
It's like one of the things that, look, we have an audience of also just founders as well.
Yeah.
And like one of the things we also talk about, and we'll probably ask of you, is like, what are your big takeaways to like early founders? And we'll get
Happy
to that.
to. Yeah.
But
yeah.
like, you also came to speak at the incubator, the Bitcoin Startup Lab incubator that I was part of. It was
Yeah.
really interesting. I gotta say, okay, like through that journey of you going through this, this is a little bit of a tangent from our typical question list, but this is the squirrel. Once again, I'm the squirrel.
Go for it.
The retarded. I'm the Ice Age retarded squirrel. But like, if you look at insurance products, the only other game in town that I saw in the crypto space was Evertas.
Evertas, yeah.
Right? Giant. In fact, in my pocket, in my wallet, they have me that like little toolkit or whatever that you can use in the nifty bottle opener.
Yeah.
Pretty fucking useful as swag. But that being said, I mean, you saw them as a giant, right? And then you guys decided to come in and you say, hey, Bitcoin as an asset itself needs insurance in order for us to build this asset composability and really build an insurance marketplace for this asset. We could be that insurance marketplace. We can be that service that this asset really needs, especially if institutions are coming in. But why make the move if you thought about Evertas as also a giant in the space? I'm just curious.
I didn't view it. Well, primarily we were aware of Evertas's existence, but we knew that it could be done a better way, right? And so Evertas is actually the only other Lloyd's of London cover holder, right? So when we're talking about like Evertas is the other main crypto cover holder in town.
Yeah,
we viewed ourselves uniquely different because we are also a tech company at our core, right? We specifically built out Bitcoin native like custodial infrastructure, being able to our domain expertise specifically in how Bitcoin works allowed us to be able to build new products and gives us kind of the flexibility and roadmap to execute in a way a traditional insurance agency would not, right? And kind of leaning on those strengths and understanding that the market still was not being served at all. And it wasn't being served in any meaningful way that people who were looking for insurance coverage felt that their needs were being met.
Yeah.
So that gave us like confidence in understanding that. And again, too, it's pretty nice to be able to say that like, oh, the market, there's one other company that may be doing this. Like it is not a saturated market at all, right? And so, I mean, Evertas does a lot of work too, also in the non-custody side. They're doing the mining rigs, business interruption insurance, like the physical property stuff. Like, so they do many, many things, and we are very laser focused on this one product too. Yeah. So I think that viewed us as, that there was a lot of opportunity to be able to provide more value, and they can't even serve retail, right? So there was just whole market segments that were wide open, let alone if they're on the margin, there may be some things that overlap as possibly competitive. It's a very big market, and I'm not concerned about that stuff really.
So do you think that AnchorWatch is like a boutique? Well, I wouldn't say investment bank, but like traditionally insurance products, like I came from a world of private wealth in like a previous life, right? Insurance products are typically there. Also, Luke comes from a previous TradFi world as well. I'm not going to mention who, but like that being said, I mean, like, do you guys view yourself as a boutique kind of asset service for this investment grade product? Because you're basically creating insurance for this asset class, which, like you said, like it's going the SMEs. It's like literally HNWIs coming in at $250K. It's outside of the typical realm of HNWIs, but like, of course, like, I mean, like $250K all the way up to $100 million.
Right.
Do you envision yourself as a bank that provides insurance that way?
Yeah. A couple of thoughts there. One, I would say definitely boutique in the scope and kind of size we're executing today. Yeah. Right. That would be one of my just bits of advice of founder in early stages is I laser focus and do a thing and do it well. It's always, when you have the full flexibility and freedom to execute and you're your own founder and you can make your own destiny to try and like do a bunch of things and boil the ocean. So today I view ourselves as kind of a boutique because we focus specifically on this, keeping the Bitcoin safe. And on the insurance side and the banking side, actually my thesis is that Bitcoin native banking in the future will be insurance companies. Just naturally where like, if you have a large balance somewhere, if you're a big publicly traded company, you're going to keep most of your treasury at a globally systemic important bank, a GSIB, right? Because they have large balance sheets and they're going to be okay.
Yes.
If you have a lot of Bitcoin and you want to have a counterparty, you want to have someone who actually has a large surplus balance sheet, which actually goes into the next step. Is I think a lot of these Bitcoin publicly traded companies, we may be seeing the capitalization of the Bitcoin native banking ecosystem. And like when you're a MicroStrategy and you have 600,000 Bitcoin, right? At some point, you're going to do something with that Bitcoin as Bitcoin continues to monetize. And I think like being able to be underwriting capital is a very natural place to go for that. And in insurance, most people usually think about it as the front end consumer who's like buying home insurance, car insurance, whatever it is.
Yeah.
But the entire back office is investment banking and private. That's what it is ultimately.
Yeah.
And you're thinking about where to deploy your risk. And I think Bitcoin uniquely in the larger capital stack for options on where to place your risk, it's an amazing risk.
Yes.
And not even from the sense of like, we designed a good product that has low like likelihood of having a catastrophic loss. But if you're looking at across, like if I invest in insurance pools for, earthquakes and floods and like fires and all these different things, you can have these incidents and loss events happen and they're non-correlated to other property risks, right? You can have a non-correlated risk, like the Dalio quote, like that is such a unique area to be able to extract alpha from like return on your own capital, as well as thinking about it from, your own risk diversification, right? So I think like on that entire back office side, which is usually what we're not talking about because we're trying to like go forward and talk about our product, but for what we're building from an institutional infrastructure standpoint, absolutely. Yeah. Mm-hmm. Part of that investment banking slot, wealth management services. I've already mentioned like, people wanting to get liquidity against the Bitcoin and doing lending. We're already doing it. We're expanding on that. Also too, like you insure the things you care about, right? So if you have a portfolio and you have all these different assets, you insure a certain amount of it. And what we're seeing from a lot of customers is, I'll pick general numbers. I have $10 million. Let me get a $3 million policy because that's like I don't want to ever be poorer than this, right? Yeah. Like you want to have that like stop loss in the event of catastrophe. And so I think this is just part of that like concierge service because right now you can't get that anywhere else.
That's cool. That's cool. I got to also ask, like, your asymmetric advantage compared to Evertas is like you mentioned, is that leading on the actual technology stack of things. Like you mentioned multi-sigs, you mentioned time locks. All these things are very key things that we could see also on Borrowlens, let alone like an insurance policy. We were doing some digging. We saw Trident Vault as one of the earlier products there, like in the product that's there. I would love to hear more about that.
Yeah, please. Cool. Yeah. I mean, this is great too, because for the first 9 months of the company, Trident Vault didn't even exist. I had this idea. Eventually, what I'm going to do is I'm going to build a really robust, secure Bitcoin wallet. And in the effort of trying to be narrowly scoped, I was like, that's a lot. That's a big lift. That's not something you do casually. Let me work on all these other paths. And eventually we got to a point where realizing that was the way for us to be able to get scaled institutional, like insurance capital support, right? Being able to have this product. And so what Trident Vault is, credit to my co-founder, Becca, who came up with the name from like multi-pronged security, and that we leverage Bitcoin native script to do more advanced custody. Now, I'll do one level click in on the technical side without going too deep, but Bitcoin has often commonly been described in larger crypto as kind of, it doesn't have smart contracting capability. It does very basic things. And it does not have the Turing completeness of maybe an EVM or a ZKP system does. But there is functionality that Satoshi originally encoded that people don't really use today at scale. And there's good reasons why. If you don't use it correctly, it was written in the way Bitcoin consensus works. It gets written 15 years ago and you can't really change it without forking, right? Yeah. And it's because of that, there's a lot of like unintended footguns and weird things you need to be aware of. But what we did is we worked on this tech stack called Miniscript, which the Blockstream research team came out with in 2018, 2019. The whole point was there's this whole robust universe of things you can do in Bitcoin that no one's doing today. How can we kind of make it so you're bowling with bumpers? How can we let you diagram out a simple semantic vault construction and then have that execute on chain and know that it can't be kind of mocked or like messed around with? And so we do that. We enable kind of a model we call like a joint custody, where for the length of the policy, well, actually I say never is AnchorWatch able to unilaterally move funds, ever. And you can provably audit this on chain when we set up your vault. The next step of that is that for the length of the policy, for the first 6 months, the customer has a 2 or 3 key set. We have a 2 or 3 key set. Yeah. They both must sign, right? And now immediately from the risk side and the insurance side, you can start seeing, wait a second, if I have 100 customers and one person has a local incident with their keys, that doesn't have a contagion event across the rest of the book, yeah. Right? And that's a problem with it's the reason why Coinbase has $300 million of insurance for $400 billion in assets isn't because they're bad or insecure. It's because all of the risk is in one place. Yeah. Right. And so this started unlocking synergies on the risk distribution side. And then additionally, we leverage time locks, which no one has really been doing up into this point when it comes to layer one cold storage Bitcoin. People use time locks in the Lightning Network. It's how the penalty transactions work. Won't get into that. But Bitcoin added time locks in 2015 and 2016 for the Lightning Network. And then no one used it for any other use case, really at any reasonable scale. And so what we do is we actually use time locks anchored not on the block height. We do it based on the calendar time. So the actual like wall time that you would see on a clock. And we are actually able to take our insurance contract that's like dated for a year and have the time, as time passes across the insurance policy, linked to the on-chain contract. So we're actually unifying a Bitcoin on-chain contract with a financial insurance contract. And that's part of your policy. You get your Bitcoin in your name with your vault information is the thing that is insured. And let's say 6 months go by, you can actually have it be so it's only one of the 3 customer keys, right? If they lost 2 of their keys. And then at month 11, there's a 30-day window where AnchorWatch plus Coin Corner, which is based out of the Isle of Man, they're a Bitcoin exchange that's been around for 10 plus years, hasn't had a loss. We, the two of us, can come together in the event the customer lost all of their keys and return their funds to them.
Okay.
And in the event, like crime insurance, in the event we like try to go run off with the money, that's insured. Right. And then finally, when the insurance contract expires, 2 weeks afterwards, we have no relationship with you anymore. It goes to your sovereign 2 of 3 multi-sig, right? Which is a different dynamic than talking to any other custodian. You have to hope that your money comes back to you when you ask for withdrawal. The natural state is if we cease to exist, you're 2 of 3, you're able to take your funds out at the end. And so this is all done on chain. And you're able to set this up and verify all of this yourself. You can, if you want to, you can hire people to go verify that. But that Trident Vault construction, this is like, I would say, our first product.
Yeah.
But now I've built the entire infrastructure around all of the wallet management and how it all gets executed. I am now able to take that and apply it 1,000 different ways. It's almost like a Lego brick. I can take out and plug something else in there. So any way that I can help empower Bitcoin to be kept safer, I can plug and integrate into. Right. And so that's kind of like the larger vision of with everything. Like I mentioned, we have customers borrowing today. I can turn that into a more standardized loan product. I could use hash locks to do like Oracle decentralization. And then like you can have a quorum of oracles that say liquidation happened and then I can pull the funds. Right. But not until the oracles all attest to that. Right. So these are all things that I think about in kind of Bitcoin as programmable money. I want to be able to use this to make it safer. And I want to be able to offer better financial services to more people in whatever form that takes. And that was part of, building our own infrastructure first. And now we control our own destiny for our product roadmap. We're not relying on, will this third-party vendor enable a new set of APIs for me to do it?
Yeah, it really makes sense to have technology as the moat to leverage it. It seems like you're like an on-chain insurance company for Bitcoin, basically. Yeah. Right? Like, and that's, I think, a relatively easy way for someone to dog food the understanding of like what AnchorWatch really is doing. Right? It's really funny. Once again, like one of the things I learned at the OpMax thing is I met someone from Puerto Rico and they said that there's very hard to get HELOCs, right? I wouldn't be surprised if that's one of your products. I could see your vision of like basically being like wanting to be a boutique investment bank and then like wanting to offer these kinds of products. That would be an extension of the next things that you guys do.
Bingo, possibly. Yeah. No, very much so. I mean, I think the lowest hanging fruit on the lending side first is I deposit Bitcoin into this time locked vault. And then I can know for a fact that I can go get liquidity against it, right? That's what we've done kind of like in a prototyping proof of concept stage with customers already. And I just see that rapidly expanding as we find the right partners to kind of deliver the scale. But the tech's already there and it can scale pretty easily. We've already kind of built out our own internal API to use our stuff. We can open that up for other people to kind of plug in and use it too. Really, the world is our oyster. And it's what we're ultimately able to enforce is this idea of this joint custody in any form it takes. I sometimes call it down to like we're a co-signer. So the funds can't move unless we co-sign the transaction while the policy's active. And that allows us to also enforce things like spending limits, whitelisted addresses, right? We're able to basically emulate covenants and more advanced smart contracting functionality since we're required to co-sign. Unfortunately, it's not handled natively on chain today, but I can take that in a bunch of different directions, run my logic validation off chain, and then execute a signature to show that you've committed to whatever prearranged setup you've done.
Yeah, and that's the way most traditional banks would work, right? If you have $100 million, it's like, and it's saying, hey, I want to go spend $20 million to buy this. Usually you call your banker and then your banker kind of executes on this and then does this for you, right? So it verifies this. So this is like very common in the idea of like large scale asset class and money movement stuff. So I could see it very much in line with these things. You also answered the question about mini script and like time locks, which is perfect.
Yeah.
I gotta ask, how'd you fucking make the Lloyd deal happen? It's not like anyone can just walk up to Lloyd's and be like, bro, insure our shit, bro. How did that happen? I mean, was it really like that? Was it like, yo, I gotta plug it in Lloyd's, and I was like, I just picked up the phone and I called them and I was like, dude, doing this thing, insure my shit.
It was 18 months of navigating who to talk to, finding the right people, understanding their incentives and how to be a value-added partner. And in conversations in general within the industry, finding that people try and go chase after Lloyd's because they have a new product and they're trying to like slap the Lloyd's name on for marketing, right? And so it was insurance as an industry is very much built on reputational like trust and iterative games. And so at first it was like, that we were kind of like told like this is going to take a lot of time. It's going to take a lot of effort on your side. You know, it'll have costs. And we're like, okay, cool. And they're like, okay, yeah, we'll see. And we just kept on executing. And this is as a co-founding team, that's what my co-founder Becca was the workhorse on while I was building out the kind of the high level wallet architecture structure. She was the one that was chasing down documents and delivering it and trying to make it a game as, they gave us a list of like 15 to-dos and she would just work straight for days and like 4 days later be like, here's the 15 to-dos. And they're like, usually that takes like 2 to 3 months for people. And we're like, well, we're a small, hungry startup and we're not some other random insurance partner that's just trying to like add a new product line. Like this is our life. Like it's a do or die. We're going to do this. And so putting that time and effort and also just kind of like having respect for understanding how things are done. Right. Yeah. So we're already kind of a new and novel tech product in a emerging industry. We wanted to very much understand, and a lot of like the consultation of how we built our vault was understanding their risks and concerns and making sure that we can kind of bring a holistic product that would just align everyone to want to make this work. Right. So it was from the time we decided we wanted to go after the Lloyd's market. We spent the first probably 6 to 9 months thinking that we could do something stateside because it'd be easier. And so once we made that commitment, that 18 months timer started, and that was a journey in its own right. But, flying over to London a couple of times, having in-person conversations, whiteboarding, diagramming things out. This is a thing too, people don't tend to get. And I sometimes explain to people who are like, people who want to do investor due diligence, as I say, listen, like if you invest $1 million in our company and we poorly execute and it goes to zero, you lose $1 million. If we poorly execute $100 million insurance policy and something goes wrong and there's a claim and it's valid and has to go through, that's a $100 million payout, right? Yeah. So the order of magnitude higher due diligence and structure is way more favored on that side. So that's actually like we're finishing up our SOC 2 audit right now. That was a breeze compared to going through all of this stuff, right? So kind of leaning heavily into that this is a difficult thing and we're going to just own that it's difficult and chew glass until it works was a really big strength for us. And also, Lloyd's is very well informed in understanding how this risk is all structured, right? Since they're the ones that underwrite all of these larger companies, they understand the risk. And this was a really interesting thing too. I was over there recently and talking to a bunch of people in the insurance industry. The talk of the town was blind signing because this was 2 weeks after Bybit got hacked. Yeah. And what I had done, because I'm a nerd, is I went and I set up a Gnosis safe with a 2 of 3 with my ledger. And I showed what Trident Vault looks like using a ledger. Yeah. And showing the entire disparate flows. And I started explaining, well, this is the nature of how Bitcoin as a UTXO state contains all of its state versus a smart contract, which is stateful. And the ledger can't process all of that state. And I did this for myself, just to show a little bit of this is why I'm building on Bitcoin, this insurance product. And the last screen on both of them, if you, in Bitcoin on the Trident Vault, it says accept and send, right? The little checkbox. On ETH, when you turn on blind signing, it says accept, risk, and send. And you show that to someone who's a lifelong insurance person, they say like, oh, I understand this, right? And so, but having conversations with them, sometimes I can show them, explain them the mechanics a little bit more, but also they understood immediately the nature of our on-chain script was different than MPC. The first question we got was, are you doing MPC with TSS, or are you doing the native multi-sig? We're like, we're doing native multi-sig and more. They're like, oh, interesting. Tell us how you're doing more, right? And I was explaining all of this, and they very much can see from the technical side the risk distribution pieces. And it's to their credit that also Lloyd's is the market for new and novel products, right? As Bitcoin continues to monetize and grow, it's a bet not just on us, but on the asset class continuing to grow. Yeah. And they want to be part of that marketplace. Yeah. It's
default exposure to this asset class and everything that's there, which is really smart. And actually, Lloyd's does produce some really smart people. One of my earliest mentors in banking, and still to this day to a certain degree, Lloyd's guy before he did UBS and ING. So fucking smart ass people is what they get out of there. You went through the ringer over there. Also, I think that's very interesting talking about like the founders and like what you can learn. I love the fact that you understood that it was 18 months and you described it as chewing glass for 18 months.
Yeah.
And that's one of the things that also dawned on me recently, where it's like you can be infinitely patient about, you have to be infinitely patient about certain things, but infinitely impatient about like iteration of your product.
Yes.
Right.
Massively so.
It's like sometimes you just have to just be like, hey, this is just the way the macro system works.
Right.
And like if I have to plug into this macro system or be plugged into the supply chain, this little sprocket, I just have to be patient, do the work and do this. But ultimately, once that happens, then everyone will buy into you and be like, hey, not only did you do the work, but you delivered on this work and now it's working. And like, holy shit, like you're one of the few that just passed that test. And it's like all just comes down to this idea of like just understanding what things really require. And sometimes it is that Sisyphusian effort.
Yeah. We pivoted in an afternoon. Yeah. We totally discarded everything we'd been working on for the first 9 months. And this is before Trident Vault and the whole concept existed. We very quickly calibrated on like, we need to do something drastically different. Yeah. And so like on that side, I think to your point, like finding the right cogs and like finding out where to put pressure on, where to be intolerant of change and where to be very open to change.
Yeah.
And that was kind of one of the tough pills we swallowed in doing insurance, is that unlike other tech companies, you can't just run insurance out of your basement like on a morning, right? So we willingly were leaning into that, observing that the rest of the market was sidestepping it.
Yeah.
And so we were going to go to where no one else had gone explicitly to create that product differentiation. And then on our side, just understanding how do we actually execute that final vision and having conviction in that ultimate vision. Like I deeply held belief is that Bitcoin continues to financialize and mature. There is just going to be an insurance market. Insurance predates, and it's funny in Bitcoin sometimes you get these takes like insurance is fiat, and it's like insurance predates fiat currency by hundreds of years, right? So like that's not even relevant. This is be like a cultural critique of Bitcoin. It's like thing I don't like is fiat, and like they don't even put any more thought into it. But even beyond that, you have the fact that just insurance is a risk market. Like it's so foundational, and if Bitcoin, in the conviction I have, and I think we like directionally like that is going to continue appreciating in price, there will be a risk market. The question is who is going to be the subject matter experts who have put in the work and effort to do that. And that's kind of us, when we started in 2022, skating to where the puck is going.
Yeah.
And now we're kind of seeing with all of this institutional adoption, like all these like the nation states and companies and kind of like onboarding from a fiduciary perspective, you're telling me that if you're going to pay 20 basis points for uninsured custody or pay 45 basis points for insured custody as a fiduciary, like you wouldn't pull that trigger, like immediately so, right? And so that's for us, like thinking about being flexible on details, but like being very like focused on the mission.
Yeah, for sure. I did want to kind of go back a little bit. You talked earlier about lending, right? So lending applications for it. So like, let's say there was a large financial institution that wanted to be able to lend against Bitcoin. Mm-hmm. Are y'all a solution for some folks like them as well? So like, let's say I personally have a big deposit of Bitcoin, not in real life, but this fantasy world. Yeah. So let's say I have that and I want to, buy some property with that. Yeah. Is that something they can plug into today? And a financial institution, if they had the infrastructure on their side, could work with you to do it? Or is that kind of like longer term?
No, we could do it today, like pretty quickly. This is part of what I'm working on now is, like opening up more of like the set playbook. I want to be able to just have someone be able to plug in and go. Yeah. Insurance, there's just some paperwork and stuff, so it can't just be entirely like low touch, like seamless nothing. But the answer is yes. We already have proof of concept customers who are doing it today. We've talked to a lot of the lending partners out there. I think the Bitcoin lending market has aggressively grown recently. A lot of people are just realizing you can actually really see too just how inefficient the market is when they're charging 12 and 13%, right? Yeah. Now, like this is actually an interesting commentary too, to chase my own squirrel for a second. An observation I have about the larger crypto ecosystem is that the structure of stablecoins plus automated market makers allow pooling of liquidity in such a way you get closer to what you would think is a reasonable fair market rate for borrowing capital, right? If you like, you can just do that for 6-7%, whatever it is, if you put in your Bitcoin. Now there is other risk, right? There's the smart contract risk, these other pieces. In large, they haven't had big structural issues for like the products at scale that are out there. But the reason why it's 12-13% is because there's not enough dollar capital chasing after this yet. And what people in Bitcoin want that liquidity, they're willing to pay that. Yeah. And so I see that massively compressing down over time. And for us, that's why we're not in the lending business, we're in the insurance business. And just like you don't have Geico doesn't only insure Toyotas.
Yeah.
We want to insure everyone, right? Because that helps us with our risk distribution, and we can actually meaningfully help lower the cost of capital too, right? If you're saying that all of a sudden, because baked into that insurance, into the rate for a loan that you're borrowing against is all of the risk the bank is bearing to lend that to you. Yeah. And if you can transfer risk off the table, you may be able to transfer lower, more than perceived risk than the price of the insurance premium. So you actually bring capital costs down.
Yeah.
Right. And so if someone wanted to come walk in the door, knock on the door and talk to us today, we could turn something on pretty quickly. That's the other thing too, as a small stage startup, like we can just focus and go, right? Launch and turn this thing on. All of the custody technology infrastructure is there. I'm assuming there would be a couple rev cycles on product cycle integration, right? Exactly the terms and the structure, but those are all things that are orders of magnitude easier than all of the existing work we've done at this point for building the relationship with Lloyd's and for setting up all of the wallet infrastructure that we already have, right? And that's kind of like our own investing in our own balance sheet, so to speak, of we have this capital, the intellectual capital and software capital of all of the software architecture. And then we have the capital partnership with Lloyd's of London to be able to underwrite all of the risk. These are things that now we can start leveraging and kind of driving, makes it a lot easier for us to go and get that next marginal deal opportunity.
Makes a lot of sense. I was curious to see also about like, okay, so many people when they come into this space, like they think about doing some maybe sexier products.
Sure.
Right. Why did you choose insurance? And what is your background? And like, how did you come to this problem?
Insurance. I picked insurance because it's boring.
Okay. Smart.
Yeah. I mean, especially in the crypto ecosystem, you usually get people that are looking for really exciting things. And there is money to be made there, to be clear. And like there are many success stories. The way my brain naturally works, I was thinking about something that would be used explicitly in 10, 20, 50, 100 years from now, right? And so my background, I went to school, got my bachelor's degree in math and econ. I was working in online advertising, digital media. I discovered Bitcoin in 2013. Funny enough, I think I told you this. I got into Bitcoin because I was a big Ron Paul and the Fed guy, sound money, and didn't have any Bitcoin at that point. And my buddies were like, check out Bitcoin. I was like, yeah, I'll get to whatever, right? I was technically proficient, but I was not a programmer. And then a bunch of my buddies started mining Dogecoin, ironically, like a week or two after it launched. Mm-hmm. And they're all with their graphics cards and they're all mining Dogecoin. Yeah. They're like, oh, this is funny. And I was like, oh, this is funny. I'll download it. I was playing around with my GPU miner, like I was in between playing video games. Mm-hmm. I was like, this is okay. I get it now. I've touched this. I understand that this is like a fun performance art parody on Bitcoin. Let me go learn about the actual thing. And so this is fall of 2013. I go to the New York City BitDevs meetup, which I think is the longest running recurring Bitcoin meetup in the world at this point. It was like BitDevs meeting number like 8 or 9. And they've went over, I forgot which one number they had recently, but they've been doing it at least once a month. Back then they were doing it twice a month. And I went there, was not a programmer, sat in the back of the room, and I was like, I am the dumbest person in this room. This is wild.
I know that feeling.
Yeah. And like, I am the dumbest person here. And what I kept on doing is I kept going back, and it started consuming my spare thought cycles. And so I got super deep into Bitcoin. Following it, I was the token Bitcoin guy from 2013 through probably 2020 at my job, 2021 at my job. I ended up moving on to teaching myself how to program. I started automating a lot of my sales and like office operations jobs, doing more and more work, automating my work, getting bored because I was automating all my work. And then I took time off to do a full-time boot camp to do data science. I then got hired at IBM as a data scientist and consultant. A lot of chewing glass, did that for a little over a year, working on big data problems like petabytes of data. I was working at IBM, the weather company. Yeah. I know they just spun off to their own company again, but IBM bought the weather company, and I was doing a lot of like analytics models based on where people were going in their consumer receipts based on weather patterns and being able to build what were called like weather trigger signals, right? Mm-hmm. So I could tell you based on the time of year and the zip code you're in, the pollen count's about to spike, I'm going to start advertising Flonase. Yeah. So I started like taking my old digital advertising background and kind of moneyballing it with all of this extra data that IBM had to be able to sell better ads, right? More targeted contexted ads. And so that was a long journey, like working on different consulting engagement projects. I got burnt out. I was working 80 hours a week, but 70, like I'm not trying to inflate it, but like genuinely it was 7 days a week, 10, 12 hours a day. And for me, it was very rewarding in building hard, complicated things, but I didn't have the agency and autonomy to work on things I really cared about. And so I was home. It was like June of 21. And then I just had my second kid. So I was spending time. My oldest kid at the time was 1 year old. I had barely spent any time with her. So I wanted to be more of a stay-home dad, spend time with the kids for a bit. And I immediately started getting stir crazy.
Yeah.
Immediately started getting stir crazy. And so this now turns into peak pandemic, the social audio app Clubhouse, if you remember that.
Yep.
I was on Clubhouse and very quickly there were Bitcoin rooms. I would go in the Bitcoin rooms. And very quickly I'd realized that the people that were on stage talking about Bitcoin did not understand how Bitcoin worked. So I started raising my hand and I started explaining things. And over time it became like a place to socialize, hang out with friends. And then that's actually where I met my co-founder, Becca. That's where I met my first angel investor, if you know him from Twitter, American Hodl. He's a prolific shit poster on Twitter. And meeting a bunch of these people that were successful in their own domains and rights and just talking about Bitcoin all day. And I was, you know what, this is like January. I was like, maybe I should go apply for a job. Like I'm getting bored. People now know me in Bitcoin. Maybe I can go work in Bitcoin. I'd never worked in Bitcoin. And American Hodl said, Rob, you're smart enough. You should probably go start a company. We probably can raise some angel money and figure something out. I was like, okay, well, if I'm going to go start a company, I want it to be something that has high impact, has a massive chance of like restructuring the financial apparatus of Bitcoin and can help with adoption and something that's meaningful for me, solving hard problems. And insurance came to mind immediately. Just as someone who was directionally following all of the markets and the structure, that like there is a massive gap here between the amount of assets that are being secured and the insurance capital that's against it, right? And kind of the things I've been talking about here. So that's where jumped off and kind of just jumped in with 2 feet, understanding that I was going to learn a lot. And that's, I think to remove any modesty for a moment, I think one of my superpowers is quickly learning new things and like kind of skilling up and like going very deep, very fast. And that's what my co-founder, Becca too, also has the same exact kind of style. And we just kind of jumped in with 2 feet and we started running and just running. Awesome. And learning a lot. Those first 6 months gave us a lot of time to learn in low stake environments, to be dumb, and then iterate, learn, improve, and just kind of step up from there.
Yeah, no, that's awesome to hear. Just kind of that startup journey and that kind of thing. And I think to your point, I mean, solving like a real problem has a much bigger impact than kind of inventing a problem, which we see a lot of in Web3 right now. Like this, a lot of problems that don't exist, but we have the tech, so we're going to try to just throw some spaghetti at the wall and see if people want to use it. But solving something that's real, definitely.
Yeah, and you know what? Like, I think culturally in Bitcoin, I fall more into the open-mindedness of understanding that people are working on hard things and that people have different perspectives, and I try to just learn from those, right? And so as a general critique of just startups in general, is I sometimes find that like people build a company and that really should just only be a feature. They're not thinking big enough, right? Like something that's like very smallly scoped, or even if it's successful, there isn't really an opportunity for you to be monetarily compensated, let alone your investors, right?
Yeah.
And so my critique of the crypto industry would usually be around tokenomics and stuff. I don't think conceptually issuing a token is bad, though, right? I think, as I mentioned earlier, like, you know, the structure of providing something like an AMM and liquidity aggregation is of value, right?
Mm-hmm.
Like there are things that are out there, and honestly, too, like a lot of the groundbreaking cryptography and stuff that got researched over in ETH with the zero knowledge proofs, those are things that people are now taking, trying to build on Bitcoin, right? So like there are nuggets of treasure to be found when you're looking through the ecosystem and understanding how this could all work. And so as someone who's been around Bitcoin since 2013, I actually was at the BitDevs when Vitalik came through to pitch the ETH presale.
Wow.
Right. So like I was in Bitcoin before there was really even a crypto ecosystem. And I think that kind of just gives me context and understanding. You see things that come and go, and you try to understand, like, there are things that are being worked on, and just following and tracking it and just trying to see where I do earnestly believe, and I try to always remind myself this, that there's always something I can learn from someone else. And I never want to be blinded by my own conceit that, like, because I got into Bitcoin in 2013, that I know more than everyone else, right? I want to be very humble and aware and constantly keeping my eyes and ears open for learning new opportunities.
Yep.
Yeah. And so that's like the insurance stuff is just, it was one of these things that just from a global market structure, I got into Bitcoin in 2013 where it was $250. I believed it was going to be big one day, right? Like, I believe we are still very early in the global, like, macro adoption of Bitcoin. And so I just see, okay, let's go up another 2 orders of magnitude in price.
Yep.
This stuff will exist, right? It will absolutely exist. And who better than myself? And that's kind of like, you know, the arrogance to think I'm going to be the one who solves this problem. But the thing is that no one was even tackling this problem. So it gave me the confidence that there was an opportunity to really go for it and charge forward. And that's a problem of that scope, size, and magnitude also just drives a deep sense of meaning for me. And that's that deep sense of meaning and purpose is what allows me to keep on showing class, right? Understanding that this is a hard problem that is worth solving, and I'm willing to put myself in uncomfortable positions and working hard to try and, not only for my own sense of validation that I can do hard things and achieve great things, but also that, like, if successful, it will also have a very positive impact in the global market structure of Bitcoin, right? And so, that's thinking about just building. Like, that's just one of those things that, like, keeps the gas in the tank.
Yeah, no, I love that. So just kind of talking about about innovation, that kind of thing. You mentioned Ethereum as well. So are y'all kind of focusing on Bitcoin for the time being, or do you see yourselves, if, let's say, some of these institutional clients, they want to insure other assets as well? Mm-hmm. Is that something that you'd consider in the future, or is Bitcoin really kind of where the focus is?
Yeah, so I would say all of the immediate focus is on Bitcoin. Insurance is an AUM game in that, whereas to maybe a lot of other crypto products where there's like a velocity aspect of getting revenue monetization, insurance is low velocity, but it's about the amount of value you have too. And then you have Ethereum, Solana, and then like this long tail. No one wants to get insurance on their Shiba Inu, right? And so, like, as a long-term capital market, you need to have something that also has confidence that, like, it's going to be around in years. Now, all of that said, and I've told people this, I've told my investors this, I've told people this publicly, this isn't new information. My co-founder and I didn't sign, like, pinky swear, never ever touch anything else, because that's just not the way that we view ourselves, kind of build capital value business. I haven't touched a line of anything else. There's no immediate roadmap, probably for the next 2 to 3 years at a minimum, to even touch anything else. And there's a lot of risk in executing additional stacks, right? Being able to offer these services from our perspective, not only on the risks of the protocols themselves, but also just on our own mission and focus. I'd have to re-architect and rebuild everything I've already done in a new language. I am not the level of subject matter expert that I am on those other things. Like, a lot of what I've built and what we've been doing has been relying on me digging down to first principle understandings of how Bitcoin works. Yep. And so it's not something that, that's why it's something I don't see executing on anytime soon, because I don't have any alpha or edge there. I don't have anything. I would have to spend a year and a half, 2 years of digging in, kind of like when I first got into Bitcoin, to understand all the intricacies before I could even have the same level of confidence and execution. And so doing right by myself, investors, customers, I'm strictly focused on where I know that I have domain expertise and I can actually add value to the chain.
So what he's saying is next insurance product is probably Dogecoin.
Yeah, of course.
We the Dogecoin
start.
It's funny. Dogecoin would be easier than Ethereum because Dogecoin also uses Bitcoin script.
Exactly.
Yeah. So like literally, just like from a technical perspective, there's less hops I need to make. I know they have Mimble Wimble and a couple other things on Dogecoin, but like those are the things that like I'm aware. No, Litecoin has Mimble Wimble.
Yes.
Dogecoin does not.
Yes.
Okay.
Lightning, Dogecoin does not have Taproot, SegWit, none of that stuff. So it's a more archaic version of it. So we, the Dogecoin delegation, would accept insurance on our products once. I'm not going to shill our stuff, but like generally, I just think, no. I mean, like, but generally, like, I just think it would be kind of interesting to have insurance around memes itself. It would be kind of hilarious.
So going to Dogecoin for a second, are there, besides the block time, the supply, and all of those different things, is there different functionality?
No.
Okay.
No.
So
there's reduced functionality in general.
Well, no, I mean, it's funny you say that. You have paid a script hash though.
Yes, you
could do mini scripts on all the stuff that I've talked about, all the tech that I've done. Dogecoin forked after Bitcoin added time lock. So everything I've just described, you would be able to do. You could transpose this over to Dogecoin.
Yes. So an insurance product for you guys to copy pasta over, the technical lift for you is not that high. Like, all I'm saying is that, like, if you're using higher order primitives of, like, let's say Taproot and SegWit and stuff like that, then maybe yes, it's going to be problematic, because then you'd have to do the whole soft fork thing, get the consensus in, have the miners pass it and all that kind of stuff, which is a huge boondoggle, as we all know. Yeah. But that being said, like, I just think, like, if you guys ever get bored and you guys want to just be like, hey, we should do something left curve.
Right.
You guys should offer it over here. We would be happy to spin that out further. We directly, I'll build you a thing on our site that says, dude, get AnchorWatch insurance for your Dogecoin.
It's funny that, that the lift actually, like, technically could be executed on. I think you should start looking at, like, the primitive programming tools I'm using to be able to build your own stuff too, though. You could lift and shift the stuff that I'm talking about, like the scripting and like building Dogecoin smart contracts.
Yeah.
You could lift and shift all that. And this is the other thing too about like never promising to touch crypto. If you said that 4 years ago, everyone would have said, oh, you'll never touch a stable coin then.
Yeah.
And like stable coins as a technology stack have very high utility. And it's one of these things I talk about in the things that crypto as an ecosystem has. AMMs objectively product market fit and it works.
Yeah.
Stable coins objectively product market fit, customers want it, it has utility, right?
Yeah.
And this is part of the example of just like if you said, oh, I'll never touch any crypto. There's been a very interesting sleight of hand over the past 18 months where now even Bitcoiners are like crypto, stable coins are okay, but no crypto, right? So like there's eventually you get to a certain level of objective market success where people are interested in touching and playing with this stuff. And what they'll say is they're building it on Lightning Network and all these things. But there's multiple, like I actually on my phone, I have 2 Bitcoin apps that are also Solana wallets. Mm-hmm. I have Lava. If you know Lava, they do discrete log. They do basically on-chain lending, DLCs.
Okay, yeah.
They do DLCs with lending, and they have their own stable coin, and it's a Solana wallet. Mm-hmm. And there's also I have the Aqua wallet, which is from the Jan 31 guys. Jan 3 guys. It has Ethereum. I'm holding up on my phone. Ethereum, Tron, Binance, Solana, and Ton.
Yeah.
And it natively supports all that. So I can send Solana to an address and it'll automatically swap and convert on the back end. Yeah. Understanding that just liquidity and peering into the ecosystem being important is just interesting to me. I was actually at the MIT Bitcoin Expo the week before Up Next, and I was card came. I put my card down there. Everyone just pay me back. A couple people pay me in Lightning, but people pay me back in Solana because I was like, I do have a stablecoin wallet.
Yeah.
Right. And it was my first time actually touching a stablecoin. But it's useful, right? Like, and you have to just like look at that stuff and understanding, you have to, as you were out to the bathroom, but talking about like always just being humble and aware that like there is information to learn from people and paying attention to markets.
Yeah.
Not being too locked in.
Feel free to grab one. I mean, at OpNext, I basically raided at Rob's Zin collection over there. And then he was like, dude, you want this Russian one? It's like 42 milligrams or something. I was like, bro, I will run back to Texas with this.
I was on layover in Qatar, and I had a buddy of mine who served in the special forces who told me about this like Siberian red. If you ever see it, buy one. So I bought a sleeve as a gag. And I bought the most intense one, and I went and did the math. It's 48 milligrams a pouch. And the thing is, it's like a triple wide. Like I'll show it to you later. Like it's obscene. And I got it. I carry one around purely out of the novelty of it because it's just so funny. Like, oh, you want to get punched in the face? Like here you go. Like huffing antifreeze. Like,
real pick me up for sure.
Oh my gosh.
But no, just that we were just talking about the Zin that's sitting on the table over here. They're not one of the sponsors of the pod. We are trying to get Lucy's to be a sponsor on the pod. David, you need to respond to my email, bro. Like
Code Coogan. Yeah,
you get
ATX DAO.
Yeah, like what the heck, dude?
I have a Lucy right here.
There we go.
You already have product market fit.
There
nice.
See? No, I mean, I really appreciate you. Yeah, I also think it's really smart to say that, hey, like, we've not signed any ink in blood to say that we can't touch other asset classes.
I just want to be respectful to my investors and not lie to them.
Of course.
Right? I need to be humble to be aware of the ecosystem that exists. And I value more my word, honor, and commitment to say that I can't promise you that than for the sake of like a social cultural gesture, promise something that I know I may have to go back on later.
Exactly. That makes a lot of sense. Fiduciary responsibility is critical. And obviously, like, word is bond. You're only as strong as your word. So
absolutely.
I was hoping to jump into the product a little bit.
Sure.
Can you walk us through what the experience is like from 0 to 1? Like, user comes to your site, says, hey, I want to insure my Bitcoin, right? Minimum $250K.
Sure.
Walk me through what that's like.
Yeah. One of 2 ways. Basically, we send out regular, just like people on our email list. They like apply to learn more. Or they'll reach out directly to what we normally plug as agent@anchorwatch.com, right? From that point, we'll set up a call, get on the call. There's a couple high-level underwriting questions we'll ask. The most big impactful ones are like, okay, you have keys. How far are they apart are they? You can't store them in the same building.
Yeah.
But then like, oh, I have a key. People are like, oh, I have a key in Texas. I have a key in Nebraska. And I have a key in New York, right? Or whatever, right? Like, oh, that's really well geographically distributed. We can lower your premium if you're over like 100 miles between keys, right? Because that just materially lowers it. And then the other really big impactful one is how often do you plan to spend? So I mentioned this earlier about like being able to, as a co-signer enforcing policy rules, majority of our customers actually use what we call the HODL discount. And they're saying, listen, this is my deep cold storage. I don't want to spend this, right? And so for the length of the vault, we won't co-sign a transaction until it's time to either renew or they're moving off the platform, or naturally they could just wait for it to expire, then they could just move it themselves. And we actually disable the send button in their wallet. And because we do that, we actually are able to materially lower their premium costs even more. Nice. And so like you get to these high level things, and if you're interested, we're licensed, I think, in now 20 states. If you're in a state we're not in, it takes us like a week of paperwork just to get that turned on. That's not really a big blocker. We make sure we have all the license and credentials to be able to do it properly. And then let's say you're good to go. We'll give you an indicative quote. You're like, this looks great. We'll do then, like, this is all just a Zoom call, phone conversation. And then you will take you over a link to our formal application. So you fill out the information. It's an insurance application, right? So you have to go through and fill that out. You get to that end, we'll do formal and so for your side, you're done. We do formal underwriting and review on our side. We give you a final quote, you accept it. We then mail you a box of ledgers. And then from there, we set up an onboarding call. Takes about an hour, just kind of walking through. We actually have customers who are savvy who are able to do it in under 40 minutes, but like just do the initial vault setup. We'll throw in $10. Like, hey, just do a check. Make sure you have all your keys. Like, can you sign? Does it all work? You're happy? You're good? We do the, we execute the test transaction and we kick you your policy and you pay your insurance premium. So this is one of the things that I think about now that we're live, we get it technically done. The things that haunts me that I try to focus on now is compressing that a lot more. I need to optimize, automate, compress that in a lot. We have a lot of people the moment we launched that were really excited, jumped in because they really needed the product, which is great as a founder to have people that are like rapidly looking for your product.
Yes.
But now I'm thinking about like, okay, I need to make this hundreds of people really easily, right? And so taking the time and effort of compressing that more to make it even faster and faster.
Yeah, scaling onboarding is like a unique science, right? Yeah. Like it really is, because right now you have a one-on-one boutique kind of product. Yes. How do you then, if it's really for SME retail still, like how do I do that? That's a very interesting thing.
I think it ultimately comes into a mobile app. You can expedite a lot of the onboarding process through a mobile app, being able to kind of quickly curate and tag things in there. You may not want to be typing out a full insurance application on your phone, but I think that helps curate the process. Being able to expedite what we call the indicative quote. Like those are things that we think about. But also right now, we have people that are interested. They're on the phone with us. We're also just doing product research, understanding their pain points, right? Being so early, like I have someone who like has gone through this effort to talk to me, like, please, like, keep talking to me, right? Like, tell me, like, what are you thinking about? How do you want to use your Bitcoin in a year, right? And a lot of them are like, hey, I don't need to borrow against it this year, but maybe next year I want it, right? So so for us, we're kind of selfishly, and our customers are very generous with their time and indulging us. We just use that opportunity to learn exactly what their problems are, right? Yeah. So we have our concept of what we thought the market wanted. We have some initial success. Now it's time to iterate, kind of really figure out, and just getting that one-on-one time with customers. Every single onboarding call, as long as I don't have I'm in the sky flying or something, I'll join the call for the first 10 minutes. And like we're at a point now where people go through the whole customer lifecycle. I haven't even talked to them. I'm like, hey, I'm Rob. Here's my email address. You have it now. Like, please like get a hold of me if you ever have any questions or comments. And I've like my favorite customers are the ones that are like, oh, hey, I'd love if you had this. And what I love being able to do is like 2 days later, be like, hey, check your, like, boom, it's already on the website, right? Yeah. Being attentive, listening to customers. And that's where at the moment I'm still enjoying the high touch because it's giving us an opportunity to learn. But I think about from a larger enterprise scale system, like that's what I want to be working on though, is making it even faster and easier.
Yeah, no, that's huge. I mean, that's like opportunity you're never going to get otherwise, right? Like just like we can think of all the things that somebody might need, but if you hear from 50 people that they have this need, okay, well, there's a market for that. So I think always keeping some form of that, regardless of how you're able to scale the onboarding. Yeah, it's huge.
And occasionally I'll send out emails with like a Calendly like book link, like, hey, put time on my calendar. And I send that to the entire our entire email subscriber base in the thousands, right? Not just our customers, right? Just like literally like you're on the email list, you're aware of us. Talk to me. What are you based somewhere internationally so we can't serve you yet? What are your hangups? Like, what are your concerns? Who do you use right now? What do you like about them? Like, what can we do to, help add more value to these services for you? Right. And just constantly in that sense of also just, we're talking about earlier about like product focus, like being willing to say like, well, we had this idea. This is trash. Customers are saying this. Let's fix it right now. Right. And I think just it's a two-way dialogue, right? Just being able to have those conversations and being very brutally honest with yourself and making it better and better.
So the start of the user lifecycle is through this onboarding process, right?
Yeah.
What is like the end of a user lifecycle? Like, let's assume that someone passes away or a disaster occurs. What happens then?
Yeah. So great question. This is actually something that we learned that somewhat emerged from our product design we weren't explicitly doing with the intention of. A lot of interest has been from an inheritance planning. And because we have that window where we can move if the customer doesn't have any keys, functionally, if the person has deceased, they don't have the keys anymore, right? And it's still their property. And so what we do is part of your onboarding, like you say, like who your beneficiaries are. We're actually rolling out this feature next week. We'll actually have a full inheritance protocol documentation, so people are able to kind of get a hold of us. We already have their names on file, right? And so in the deceased case, someone would reach out to us. We would be doing a lot of reach out too, right? And we're working now on iterating and making that an even better experience. And it's also one of those things too, where if you're the grieving widow of someone who, has $1 million of Bitcoin, you just want the problem fixed, right? Yeah. It's not fortunately we haven't had that issue occur yet. But it's one of those things that, having that clearly documented as a protocol, being able to help them support them. I think, what was your other question? The end of the customer life cycle, though. Yeah. So also for renewal, so annual policies, right? So let's say this time next year, I've gone through a full life cycle. I have customers that are now choosing not to renew. There's two ways I can go about it. They could just say hey, this is when I signed up. I wanted this. This was my cancellation address. Help me move the funds out, and the policy expires. We can help them do that. Alternatively, the nature of the product is when the insurance contract expires, they can just move the money themselves, right? And so you have some people that may self-select and self-remove themselves out too. Obviously, we'd work on customer retention, minimizing churn, and seeing what we could do to help them out. But yeah, for that end of the life cycle, that's something that we haven't had anyone cancel yet, and we have not been in business for a full year yet, so we haven't hit the end of the policies. But that's going to be a lot of that, and just also doing a lot of wax on, iterating, polishing. Now that we're launched, we're really good at onboarding, streamlining that up, and then we're going to be getting to the tail end of that customer cycle in maybe about 6 months and understand where people are at, and then rapidly iterating and improving on that too.
Cool.
Yeah.
That's awesome. No, very cool. So Rob, this has been awesome hearing from you. I'm really excited about what you're building. I think there's a huge need for that. If folks want to get involved with kind of what you're doing, or kind of maybe they're considering getting their Bitcoin insured, that kind of thing, how do they connect with AnchorWatch? How do they connect with you? All of that.
Yeah. So you can follow me on Twitter at Rob1Ham, ROB1HAM. You can email me at rob@anchorwatch.com. You can directly hold line to me. If you just want to go through, talk to the agent, agent@anchorwatch.com. Either myself or my co-founder, Becca, or our head of ops is going to pick you up from there. And that's good places to keep in touch. Anchorwatch.com. If you're interested, there's an email list you can follow up there. We send emails. We try to do it once a week, and we try to keep it to under 400 words, keep it very concise, compressed, just punch, here's a little information. We're not trying to blog in your inbox, try and be respectful of your time and your attention. So those are all the different ways you can get a hold of me.
Awesome. Dude, thank you for coming in, man.
Thanks for having me.
Thanks for tuning in to this episode of the ATX DAO Podcast. If you like what you heard, please rate, subscribe, and share the podcast with your friends and colleagues. To learn more about ATX DAO, visit us at atxdao.com and follow us on X, Farcaster, and LinkedIn at ATX DAO. Thanks again for listening, and we'll catch you in the next episode.